Good morning, everybody. Scott with Pratt & Associates Realty. Something interesting from Larry Fink, the CEO of BlackRock. He says, despite asset valuations and some geopolitical issues, the market isn't facing any real systemic risk and sees corporate earnings continue to do well. I would argue today that because of the expansion of the global capital markets, we're diffusing more risk than ever. There's actually less systemic risk today than ever before. This is kind of like a counter narrative to what we're seeing out there in the car market and the global bond yield curves inverting or uninverting or whatever. I think it's inverting. Manufacturing shutting down. We get manufacturing numbers today, not all of them, just S&P Final and ISM. We also get some job opening numbers today, and we'll just continue to follow that data as we go. Speaking of who else is also following the data, if we go over here to Mortgage News Daily, the Fed is considered to be dovish when they're, well, excuse me, that's I'm speaking ahead of myself. The comment earning the most focus, now this was from his speech, I believe, yesterday. Comment earning the most focus was essentially a reminder that the Fed is not in a hurry to cut rates and will be guided by the data. They've always said that. They have said this entire year. They probably said it in the entire administration of Jerome Powell. I'm not saying Jerome Powell is wrong or anything like that, but this is what they use. This is their words to guide the markets. Now, are they stupid or inept? I don't think so. I think this was all quite well coordinated and planned. The uneducated economist has been saying that for a while. This isn't really anything new, but bonds were modestly disappointed nonetheless. So the bond market, moderate losses for bonds, as Powell says, Fed isn't in a hurry to cut. That's from Mortgage News Daily. Also, we have the port strikes that are going on the East Coast. This is something that we need to watch for. Is this going to create a higher inflation type scenario, or is this maybe a short-lived type thing as they continue negotiations? Apparently, the Biden administration is continuing negotiations. They're not enacting the Taft-Hartley Act, so they're which is like an 80-day cooling-off period. I learned that from Mike Zuber today at Daily Financial News. But they want to continue to do negotiations. Should you stock up on toilet paper and food? You should anyway. You should also stack up on cash. I've been telling you all that since July 1st of this year. So stack your cash, y'all. Anyway, I have some information I like to share with you every single month from my FMLS here in Atlanta, and it's about housing inventory. It's more localized stuff. If you're in the Atlanta area and you're looking for this kind of stuff or information about that, you're going to find this useful. Sorry, I've got some text coming in. But anyway, sales price, the median. We're over here at 2021 in January. Average sales price, 282. Big spike up here in June of 2022. Again, June of 2023, big spike. June of this year went way above and beyond that at 407,000. We went down. Now we're going back up. Do you see this little trend line here? This little upward trend line. I'm guessing this is because of interest rates. Guessing this is because of interest rate cuts. New listings going down. You see these big waves. It's like waves in an ocean. That's how it does every year. Well, we have the most new listings since way over here in August of 2022, so that's great. But not a lot being added to the market. Homes for sale increasing. That means stuff is rolling over from previous months. We know that because if you look at days on market, we're up in the 20 average and median. We're in the 39 average. Cumulative days on market coming up as well. So stuff is rolling over. Inventory is rolling over. Closed sales crashed. Well, we'll see October. Let's see if it comes back up again just because of the interest rate cut. Pending sales is also down really low, but it does this every single year as we've noticed, but typically by December. So we're already hitting December numbers with our pendings. Month supply, we're now at 4.1. We were at 3.9 last month, 3.7 the month before, so now we're at 4.1. If you remember, did I pull up this article about... I wanted to talk about, I didn't talk about this article yet. KB Home Chief Operating Officer is slashing prices in key markets, Orlando, San Antonio, Austin, and Jacksonville. It's because of the dynamic there. He quoted 5.5 months of supply in those markets, which means that he's got to compete with existing homes. He's got to compete now with the oversupply in those markets in general. And now they're slashing prices. So this is the first big sign that I have seen in home price deflation. Now, there's been price corrections, correct, guys, but now it's hitting like brand new homes, not existing homes. Now brand new homes are slashing prices. Interesting, but only in those key markets. If you remember in Resi Club, there were several other, we had the whole United States map, areas that were doing poorly and areas that were doing well. In the Northeast and Midwest, those areas seem to be doing well. Those real estate markets, even here in Atlanta, we seem to still be doing okay. We're at the 4.1 months of supply, so we're not quite at a buyer's market, but we're very close. I think we're kind of are hitting a buyer's market, but when you see it hit up to 5 months of supply, definitely a buyer's market. Anyway, guys, this video is already way too long. I do this every time I come on here, but I just want to pack as much information here for you as possible. I hope this always helps y'all, and I hope I help give you a clear picture of where the economy is headed. But I'll talk to you later, and hope you have a fantastic day. Talk to you later. Bye.